Welcome back. Hope everyone's doing well and had a good day today. This is another video where we will analyze how Nifty behaved today on 21st of April. We will decode the price action and understand the market structure one bar at a time. And later we will discuss what do we expect tomorrow. So going into the day, we had a huge rally on Thursday on 17th of April. Like I had discussed on the previous video, whenever yesterday is a buy climax day, we did close as a buy climax on Thursday. We usually have a follow through buying on open, about 5 to 10 bars. And after that, there is a 75% chance that the market will go sideways to down for at least 20 bars, around 2 hours, or maybe for the rest of the day. That is a common market pattern. It is very less likely, just about 25% chance that the next day is going to be another strong bull trend day. That is a common pattern. For example, if I have to show you, okay, yeah. On 7th of April, we closed the day with a buy climax. Next day on 8th of April, we opened gap up and we went sideways for the rest of the day here. Let me pick some other example as well. Yeah. We closed the day as a buy climax on 24th of March. Next day, we did open a gap up. We had a follow through buying on open, and then we went sideways to down for the rest of the day. This is not a buy climax day. We closed the day as a trading range here, so does not have any relevance on the next day match. Yeah. On 20th of March, we did close the day as a buy climax. Next day, we did have follow through buying here, and if you see around 11 o'clock, we went sideways for the rest of the day. Yeah. So yeah, that's the common market pattern. So today, before the start, I was expecting another follow through buying on open, looking at how strong the trend was on Thursday. And after that, around 11 o'clock, after 5 to 10 bars or maybe 15 bars up, I was expecting the market to go sideways to down. Also, we had discussed in the previous video about this symmetry measure move target as per the monthly time frame. I'll explain you again. In the monthly time frame, we went around 220 points below the prior month low. So similarly, once we broke above the prior month high, the market usually does do symmetry whenever there is an outside up day or an outside up month or an outside up week. So similarly, since we went 220 points below the prior month low, it was expected that we might go 220 points above the prior month high and then go sideways for the rest of the month. Okay. So that is one magnet I had drawn all the way up there, 24,090, which was the symmetry measure move as for the monthly time frame. So let's start. I have this 25th March high as well, which is similar to the previous day high. Here, this was the prior swing high on the daily time frame, an important swing high. In the market on Thursday, we did break above the high, but we closed below. So that is another magnet here. Okay, first bar of the day, we opened a slight gap up. However, there is a big tail on the top of the bar. Also, since yesterday we closed in this tight trading range, if you calculate a measure move target based on this height, takes us somewhere to 23,960. We went above that. If we take a measure move target using this prior swing low, bar 50 low, takes us somewhere to bar 23,982, which is where the tail at the top of bar 1 is. Also, if you see, you mark a trend channel line here. So yeah, multiple magnets at the top of bar 1 high. So not a high probability buy at the close of bar 1 or at the high of that bar. Wait for the market to decide its direction. And it's also, since we closed as a tight trading range going into the yesterday's close, it is also possible that this breakout might be a possible final flag, and we might have a final flag reversal soon, a possible higher high major trend reversal. So wait for some more clarity, some more confirmation before going long or short here. Bar 2. So we found buyers below bar 1 low, and it is also a micro double bottom with bar 1 low. possible breakout test of the previous day high. However, a high one buy signal was late into the rally. We had a huge rally on Thursday, and this opened the gap up after a tight trading range here, and this is a possible final flag reversal. However, we do not have a sell signal bar yet, but we have a high one buy signal bar. The buyers will have to be careful buying above the bar too high. There are more likely buyers below the bar too low, as well as near the previous day high and around the moving average rather than the buy one bar too high. So more likely buyers below bar too low. Bar 3, bear inside bar. 3 bars, but all 3 bars on open have tails at the top and the bottom of the bar. Trading range behavior, possible trading range open here. More likely buyers below and sellers above the bar. Bar 4. Now we have 4 bars on open, out of which 3 bars are bull bars and only one bear bar. Also, the first 3 bars, the last 3 bars here have higher lows. This is not the best buy above bar 4 high. It is a low probability buy because we are in a tight trading range of the first 3 bars here. So there will be more likely sellers somewhere higher at the bar 1 high. Higher probabilities to wait for a breakout over the bar 1 high and wait for a strong follow through before buying. It is a possible trading range open after the first 3 bars. So low probability to buy above bar 4 high. High probability to wait for a breakout above bar 1 and follow through before buying, which is what we got on bar 5. Breakout above bar 1 high. However, looking at the first 3 bars today, it is a possible trading range. And if it is a possible trading range, what do you think will happen after the bar 5 breakout? Will there be disappointment or will there be happiness for the bulls? More likely disappointment. So bulls, so bar 5 is actually a very important bar here. If bar 5 closes as a strong bull bar, a strong follow through bull bar, then this will turn this trend into a buy the close bull trend. If it is a weak follow through, it is a possible trading range or a bull channel. As long as it is making higher lows, it will be a bull channel. So follow through on bar 6 is very important right now. What do you think has happened on bar 6? Weak follow through for the bulls here. Also, if you see the gap with the bar 1 high has closed. Bar 1 high was around 24,004.2 and the low of bar 6 is around 24,003. So the gap has closed. So this is not a strong bull rally. The bears who shorted down bar 1 high are able to make money. And if the bears are able to make money, the trend is not as strong as it seems. This is more of a trading range or a bull channel. So look to buy low instead of buying high up there. Bar 7. So this is the second bar in the first 7 bars. What do you think is more likely on the close of bar 7? More likely the buyers will look to buy the close of bar 7 as well as buy the low of bar 7. Also, we were in a 6-bar bull micro channel. The first bar which goes below the low of the prior bar will find buyers. So more likely buyers on the close of bar 7 as well as below. Also, it is a possible bull channel. We are making higher lows and higher highs. So bulls will be looking to buy around 50% of this bull leg. High probabilities to wait for a reversal bar somewhere around the moving average or somewhere near the bottom of bar 4 low and look to buy above it. Bar 8, strong high one buy signal bar, reasonable swing buy above bar 8 high. Whoever is taking the buy signal on bar 8 high has to use a stop at least below bar 4 low or all the way below bar 2 low. Very low probability if you use a stop below bar 8 low because this is a high one buy signal bar late in a bull trend. Also at the top of a bull channel. So high probability is to take a swing buy above bar 8 and use a stop all the way at least below bar 4 low. Bar 9, good follow through for the bulls. However, they have to be careful here. We broke out above bar 1 high and we pulled back. Once we break out above bar 6 high, there will be more likely bulls taking profits near the bar 6 high, above the bar 6 high, rather than bulls taking longs. Also, if we went around 30 points above bar 1 high, so you might go around 30 points above bar 6 high and create a wedge top. before going sideways. Also, we have a follow through buying on the first hour of the day after yesterday has been a buy climax day. So we have to be careful that once the follow through buying ends, the day is more likely going to be sideways. So bar 9, good follow through for the bulls, but they need strong breakout above bar 6 high as well as strong follow through to avoid a possible best stop. Strong breakout bar 10. Strong bull by the close bull trend, 3 bars closing near its high. However, possible wedge stop. Let me get rid of this lines here. We are at so bar 11 is an important bar for the bulls here. If there is a strong follow through on bar 11, this will turn into a more likely buy the close bull trend, a failed low to top here, and a breakout and a measure move up. If bar 11 turns out to be a weak follow through or a bad follow through for the bulls, that will create a wedge shop for the bears here around the symmetry measure move target, an important magnet which I had discussed in the previous video, and will result in 2 legs arrested on somewhere around AMA. Bar 11 weak follow through for the bulls, not the best of the follow through. Also, let the gap close. Bar 6 high is around 24,036 and bar 11 low is around. The gap hasn't closed yet, but it is not the best looking bull bar. Why isn't bar 11 as big as bar 10 and why didn't it close near its high? Makes me think we are going to have a pullback soon, at least below bar 6 low. Bar 6 high. Bar 12, bear bar. We have a wedge shop here. However, this is too tight of a bull channel. There are more likely going to be buyers below than sellers. Buyers somewhere near EMA, near bar 8 low. Buyers will wait for a more complex pullback, maybe a high 2 or a wedge bull flag. Any reversal from here will more likely be a minor reversal and create a bull flag rather than a opening reversal down. The bears need a second entry shot. And since this is a tight bull channel, the bears will be looking to sell above bars rather than sell below bars, rather than take stop order sells. Bar 13, another bear bar, close below its midpoint but a small bear body and not as big as bar 12. More likely buyers below. The sellers will be looking to sell above bars. Bar 14, another bear bar closing near its low. Now we have 3 bear bars closing near its low. However, the channel was too tight. This 4 bars were too tight. There is a big up, big down confusion. The buyers want a second leg up, and the sellers after these 3 bear bars need a second leg down. This can create confusion and a possible trading range. And in a trading range, you look to buy low and sell high. And right now we are low. So you should be looking to buy somewhere low here. The bulls got a big reversal here. Bar 15, big bull bar closing near its high. However, the problem here is bar 15 is forcing bulls to buy high in a possible bull channel after a possible wedge shop. And wedge shop usually results in 2 legs down at least. This is just 1 leg down here. And it's possible that bar 15 is a bull trap and a second leg down might be likely. So more likely sellers somewhere around the bar 11 high. Buyers will be waiting either for a strong breakout above bar 11 and follow through before buying, or will wait for a pullback to buy. So bar 15 forcing bulls to buy high in a bull channel. High probability to wait for a breakout. Bar 16, good follow through for the bulls, but we are right near the bar 11 high. Bulls need a breakout above this, or they will be hesitant to look to buy this high in a possible bull channel. More likely, sellers somewhere in this area. Bar 17, double top with bar 11 high, high double top, and outside down bear bar. However, this is 2 less of the bars to create a major trend reversal down. Just 2 bars up and a bear. It is a reasonable short, but only short for a scalp. Maybe around EMA, maybe around bar 14 low, maybe around 20 points, but not a swing low, not a possible high of the day. More likely a minor reversal down into bull flag around EMA, and then the bulls will look to buy again. Bar 18, the sell signal didn't even trigger. The buyers got a breakout above this double top, above this wedge top. Looks like we are going higher. The bulls need a good follow through here. Again, another weak follow through. it is still reasonable to buy the close this. However, you have to be willing to use a stop all the way down to bar 14 low. We broke out above bar 1 high, we pulled back. We broke out above bar 6 high, we pulled back. We broke out above bar 11 high. It is possible that we might pull back. Also, the follow through is not as strong as it was, as it should be. So, possible pullback soon. You can buy, but buy only for a swing using a stop all the way down below bar 14 low and buy small. And wait to add on, wait to scale in once there is a pullback, or we can always scale in once there is a strong follow through. Strong follow through on bar 20. However, we are right near the Measure symmetry target, the monthly time frame target. Still, this is too strong. Any reversal here will only be minor. Reasonable swing by the close bull trend. You have to use a stop at least below bar 17 low. Looks like we are going higher. Let me get rid of this line. We have two bars closing above the magnet here. Looks like we are going higher. So we have a bull bar closing near its high, and okay follow through here. Another bull bar closing near its high, okay follow through. Bulls need strong follow throughs here, or else the market might create a parabolic wedge shop and start pulling back somewhere to EMA. Also, one more thing here, though the follow throughs has been weak, but it is also a 5-hour bull micro channel right now. And we did break out above this wedge shop along with follow through here. So bulls at minimum will need a measure move target based on the height of this double top, which takes us somewhere to 24,115. And since it's a 5-hour bull micro channel, more likely bias below bar 21 low. And that is what happened. Bar 22, as soon as the bar did below a bar 21 low, it found buyers and a strong tight bull channel right now. We have lack of consecutive bull bars here. However, the channel is too tight, so more likely buyers below. The bears will get here is sideways, unless there is a strong bear breakout, reversal up, and a second entry shot. Bar 23, Doji, we are hovering around the measurement target, near the measurement target based on the height of this double top, but the channel is too tight, more likely buyers below. Bar 24, bull bar closing near its high. We have one push here, we have second push here. It is possible that bar 24 is the start of the third push here of a parabolic wedge shop. How the channel is too tight, any reversal down will only be minor. And most of the wedge stops, when the channel is tight or when the trend is strong, usually fails. Bar 25, another bull bar closing near its high. We are going above the double top measure move target here. So it looks like the bulls are using some other measure move here, maybe around 24,041. The channel is too tight. Even if we do go there and pause for a bit, it will only be bulls taking profits and not bear shorting, and we will continue to keep going up. The trend looks like another day where another day of a small pullback bull trend. Today was more likely going to have a follow through line on open and possibly going to go sideways, but this right now looks like a small pullback bull trend. This might be one of those days where the other day is also a strong bull trend day. Let's see. Right now it does look like that, but if we start reversing down, if we start having a lot of sideways trading action, trading range price action, I might change my mind. Right now it looks like a tight bull channel, small bull trend. So buy for any reason, buy below the bars, buy on the close of the bars, buy above bars. Bar 26, parabolic wedge shop with bar 17 high, bar 22 and bar 26. Consecutive wedge stops. However, the channel is too tight. Any reversal down will only be minor. And the bears, instead of taking stop order sells, will be looking to sell above bars. So more likely sellers above bar 26 high and buyers below. Bar 27, micro double top with bar 26 high, but too small. Barely any bear strength, more likely buyers below, sellers above. Bear bar closing on slow, but in a tight bull channel like this, the first breakout of the bull trend line will more likely find buyers here. So this is the first break of the bull trend line here. And whenever the market tries to do something for the first time, it usually fails. 80% of the time it fails. So more likely buyers below bar 28 low. Bar 29 high to buy setup. Bar closing near its high. Go to bull reversal bar reasonable. Swing long. This small pullback bull trend. Bar 30 will just trigger the buy signal, but bad entry bar for the bulls here. However, still more likely buyers below and sellers above. Sellers, more likely sellers above bar 27 high and buyers below bar 30 low as well as bar 29 low. Another doji looks like we are entering a tighter range, but still the gap here has not closed. As long as the gap stay open, we did come in, we did test the gap, but we did not, but the body gap is still there. So this is still a possible small pullback bull trend and we haven't yet reached the measure move target. So more likely buyers below and sellers somewhere near bar 27 high or at the measure move target. Bar 32, good follow through for the bulls here. Looks like we are going higher. More likely buyers. This is a small order bull trend you can buy for any reason. You can buy the close, you can buy above bars, you can buy below bars, you can buy above prior highs. As long as the gaps stay open and there are gaps and body gaps, the market will continue to keep going higher. Bar 33, okay follow through for the bulls, but go close above the midpoint. Looks like we are going higher, though we are right at the measure move target. But the bears haven't done enough yet. So even if there is any pause here, it will more likely be bulls taking profits rather than bears selling. So more likely buyers below. Doji on bar 34. Bar 35, another doji here. Looks like some hesitation near the measure move target. But more likely buyers below in this small pullback bull trend. Bar 36, good follow through for the bulls. We are going higher. Now the next measure move target comes with bar 3 low, another swing low here, which takes us somewhere to 24,200. It is possible we might get there. This is a strong rally, a small pullback bull trend with gaps and body gaps, so buy for any reason. Bar 37, another bullback closing near its high. Now we have 1, 2, 3, 4, 5, and 6. 6 consecutive bull bars here. More likely buyers below and buyers above the bar. 7th consecutive bull bar, bar 38. Looks like we are going higher. Bar 39, bear bar, but the first bar in past 7 to 8 bars. And such a strong bull micro channel, a 5-bar bull micro channel here, more likely buyers below. Bar 40, bull inside bar, but a bar closing near its high. Small bars, but still, even though there are no strong breakouts or follow throughs, no strong bull spike somewhere here, this is still good follow through for the bulls. Small bars, but bars closing near its high, and most of the bars are bull bars. The bulls are right now dominating. The bears at best can get sideways, and it is unlikely that we might reverse strongly here. Bar 41, another bull bar closing near its high. Small bull body bar closing near its high, more likely buyers below and above the bar. Bar 42, bear bar closing near its low. Micro double top with bar 39 high. However, first bar in past 7 bars to go below the low of the prior bar. More likely buyers below. It's a strong bull micro channel here and a tight bull channel here. Any bear stops, any double tops, any minor reversal pattern will more likely result in bull flag and continue to keep going up. More likely buyers below. Bar 43, bull bar closing above its midpoint. Buyers below, buyers at the close of the bar and above. However, we are approaching this measure move target here. The big bulls looking to take profit somewhere here. Bar 44, looks like we are entering a tight turning range here. We have a bull bar then a bear bar. Bear bar के बाद वापस से there is a bull bar, and after bull bar we have another bear bar, a bear inside bar. A lot of overlap here. Tight turning range somewhere near the measure move target. The bulls have to be careful here. Bar 45, II pattern short. However, this II is in a tight turning range, so not a high probability short below bar 45 low. Yes, we are near the measure move target. Yes, it's an II pattern, but it's a tight bull channel and it's a tight turning range here. So more likely buyers below and sellers above. Bar 46, as soon as we dip below bar 45 low, though we did trigger the II sell signal, we found buyers below. Why? Because it was a tight turning range here. Bar 47, we are breaking out of this tight turning range. However, tight turning range late in a bull trend is usually a final flag. Once we break out above this, we might rally for 2 or 3 bars, but it is possible final flag reversal soon later. and the bears reversed on the next bar itself, bar 48, tight trading range, and we have been above EMA for almost 48 bars here for almost 4 hours. The bar usually 99% days have at least one close below EMA, and 99.9% days have at least one touch of EMA. So more likely buyers will look to buy somewhere near EMA rather than buy in this side trading range. So more likely sellers above and buyers somewhere near EMA. Bar 49, two bear bars closing there is low, but this bar, if you see, we closed above EMA, and this is the first touch of EMA in past so many bars. Where more likely there is more likely buyers somewhere near EMA. You might reverse and test the high using a 20 cap bar buy setup here. Bar 50, high one buy signal, 20 cap bar buy setup here. However, the bulls this late in a bull trend will expect a more complex pullback rather than a high one buy signal to buy. Yes, it's a reasonable buy signal, but buy only for a swing using a stop all the way down below bar 29 low. The buyers do not have that high of a probability. High probability to wait for a high to buy signal or a second entry buy, or to wait for a follow through on bar 51. If there is a good looking bull bar on bar 51, more bulls will be willing to buy. Bad follow through for the bulls. However, bar 51. This is the first close below EMA. If you see, since Thursday, we closed below EMA on bar 22. After that, we do not have any single bar closing below EMA. Almost 203 bars where we did not close below EMA. This is the first bar doing that, bar 51. So what is more likely? Bear trap or start of a bear trend? Bear trap is more likely. The bulls need a good buy signal bar after this, or maybe a bad follow through for the bears will confirm that a bear trap is more likely than a start of a bear trend. But bulls need a good buy signal bar here. First bar closing below EMA in past 100 plus bars, more likely bear trap, need a good buy signal here. Bulls need a good buy signal. Also possible breakout test of bar 27 high. Bar 52, bad follow through for the bears. However, not a great buy signal. It's a bear body for the bulls here and a tail at the top. Also, we close below EMA. Bulls need a strong buy signal here to make this more of a bear trap and reverse up in this small pullback bull trend. Bar 53, weak buy signal, not high probability yet. Yes, it's a second entry buy signal and a micro double bottom with bar 50 low. But the bar closed with a tail at the top, closed below its midpoint and closed below EMA, not high probability yet. More likely buyers below and sellers are above. Bar 52, 54, huge bear surprise. Big bear bar closing on its low. Big bear breakout bar. This just changed the character of the market. The market was in a small pullback bull trend. We were making gaps and body gaps. We did reverse from the measure move target, but this was more likely turning to be a bull flag rather than a start of a bear trend. However, this bar itself changed the character of the market. This made trading range more likely. After such a strong bull trend, any reversal down is going to be minor, and this strong bear trend made trading range more likely rather than a bull flag. And since trading range, what should you be doing? You should be buying low and selling high. And where are we right now? We are low. Yes, it's a bear surprise. A second leg down is possible. However, since it's a trading range, it is also a possible second leg bear trap. And you should be looking to buy low, sell high. Bar 55, strong buy signal. We are at the bottom of the trading range, so moving average seems flat, and we have a strong buy signal near the bottom of the trading range. Reasonable buy above bar 55 high for a scalp, since we are in a trading range. Bar 56, strong bull breakout. However, what do you think is going to happen here? We had a strong bear breakout. We had a bad follow through. Now we have a strong bull breakout. What do you think is going to happen? More likely we are going to have a bad follow through because we are in a trading range. And since we are in a trading range, more likely there is going to be bulls exiting longs with scalp profit rather than swinging the longs. So whoever bought above bar 55 high should look to exit. Bar 57 disappointing follow through. Disappointing follow through for the bulls. Makes trading range more likely. Look to buy low, sell high. So what about selling below bar 57 low? We had a two bar strong bull spike. So bulls will be expecting second leg up. Also, we are right near the middle of the trading range here. Wherever the market is in the middle of the trading range, there is a 50-50 chance we might go up, 50-50 chance we might go down. So the probability of going up as well as down is around 50-50. So not high probability to buy or sell anywhere around the middle of the trading range here. More likely buy somewhere near the bottom of this bull spike here and sell it somewhere up there. Bar 58 doji and a high one buy signal bar after this bull spike, but high probability is to wait to take a second buy signal or a third buy signal whenever you are in a trading range. And also we are in the middle of the trading range where probability is usually low. Look to buy low and sell high. Bar 59, another small bar right near the middle of the trading range. More likely sellers above and buyers below, and confusion somewhere in the middle. Best choice right now is to remain flat. Bar 60 looks like we are entering a tighter in the range here. What about a micro double bottom with bar 58 low and a buy above bar 60 high? The probabilities are not that high. If you're doing that, do that only for a swing using a wide stop. We are right in the middle of the trading range. Also, the buy signal bar is not as strong. It is a bare body. A high probability path. Bar 61, we are entering a tighter range here. More likely buyers below and sellers above. Bar 62, bull bar, bull signal bar, also a possible wedge bull flag here. A small minor wedge bull flag after a bull spike here. However, like I discussed, we are somewhere in the middle of this trading range here. We get rid of this measure move here, where the probabilities are usually not as high. High probability, if you want to buy, is to wait for a bull breakout above this trading range along with follow through, or look to buy lower. The probabilities are not as high to buy on the high of bar 62. As soon as we went above bar 62 high, we found sellers, and we are in a tight range here. Limit order market, best thing is to remain flat. Bar 64, bear bar closing on its low. However, we are somewhere near in the bottom range of the trading range here. This is a buy zone. The sellers, if they want to sell low, they have to wait for a breakout below bar 55 low along with follow through before selling low in a trading range. So this is a buy zone. Any reversal here, look to buy. Bar 65, weak follow through for the bears here. Bar 66, strong bull bar closing near its high. However, this bar right here is forcing you to buy high in a trading range here. I do not like to buy outside up in a trading range because it forces you to buy higher. And I'm looking to buy lower. It is a possible triangle here. We have 3 pushes down and 2 pushes up. So possible triangle. A double bottom with bar 55 low. It is a reasonable swing buy, but it is too late for me to buy anything for swings here. And also it is somewhere in the middle of this trading range where the probabilities are usually low, right below the moving average. I will buy if there is strong follow through, maybe a series of bull bars. After this bar, maybe if there is 2 bars, 3 bars closing near its high, I will look to buy there. I need signs that the bull trend is strong before looking to buy higher, or else I will be looking to buy lower. Bar 67, strong bull follow through, but near the top of this side trading range here. Bulls need to break out at least above bar 56 high to make me want to buy, or else more likely sellers above bar 67 high and buyers below. That is what we got. Bar 68, sellers above. Bar 69, another doji, and entering the tight trading range here. Right near the middle of this trading range, the probabilities are not that high to either buy or to sell. Best choice is to remain flat. Bar 70, big bear bar, but we haven't yet broken out below bar 55 low. Bears need a strong follow through below bar 70, a strong bear bar closing near its low to flip the market to always in short, or else the buyers will come in here. More likely buyers below bar 70 low and buyers on the close of bar 70 rather than sellers. That is what happened as soon as the bar closed. We have a bad follow through. Bulls bought, expecting a bad follow through. Bar 72, bear bar, but no strong breakout yet below bar 55 low. Weak follow through for the bears, more likely buyers below and sellers above. Bar 73, this is just confusion. And this is too late. It is around 3:15 already. This is just too late for me to take any trades. Expecting a buy the close bull rally or sell the close sell off. Looks like we are closing in a trading range, which is what we did here. So interesting day today. We had a follow through buying on open, a wedge shop. We broke out over the wedge shop, went for a measure move based on the height of the wedge here, using the bar 3 low. A small pullback bull trend until midday, after which we had this big bear surprise which turned the market into trading range. The trading range actually began around bar 26. It began almost 1.5 hours before the bull trend ended. But that is how it looks by the end of the day. So good day today for the bulls on the daily chart here. We had a strong bull breakout here. We had a gap up here and another bull bar closing near its high. So what am I expecting tomorrow? What does this look like? This looks like a very strong bull rally. For almost 7 to 8 days here, we have a strong bull micro channel. Every low is above the prior bar's low. Also, we had a spike and a channel bear trend. And once we break out above the bear trend line here, if I draw it clearly here, we were in a spike and channel bear trend. And usually, once we have 3 pushes down and a strong reversal up, we usually go to test the channel high, which takes us all the way somewhere to 24,850. And the rally is too strong here. The target for the bulls, the next target for the bulls should be somewhere near 24,850. Also, since we have a strong follow through after the bar set, after Thursday bull breakout bar, it is possible that we might even get a measure move all the way up there, which takes us somewhere to 20,100. So tomorrow, I'm expecting another bull trend day. However, we need to break out of this trading range. If we do open gap up, I will look for a early sell off and look to buy for another strong bull trend day tomorrow. If we do open within this trading range, I will either wait for a bull breakout or a bear breakout to take any trades. Also, since I'm expecting another bull trend day tomorrow, so what usually happens in a bull trend day, to make it simpler for you, is that there is usually an early sell-off. The market might open somewhere here, might be an early sell-off, reverse back up, and close somewhere near its high. And to close somewhere near its high, it needs buy to close bull rally towards the end of the day. So tomorrow, I will be looking to buy after an early sell-off, a possible bear trap on open, reversal up. I will be looking to buy that And towards the end of the day, I will be looking to buy for a buy the close bull rally, since bulls will be looking to close the bar as high as possible, since this right here looks like a bull trend. What if what about the possibility of a big bear trend tomorrow? That is very less likely. After such a strong bull rally here, the best that the bears will get tomorrow is sideways. So tomorrow either a strong bull trend day or a sideways day tomorrow. Less likely to be a bear trend day tomorrow. So that's it. Thanks for watching. Hope you all have a good day tomorrow. Thanks everyone.